I'm wondering if there is a common ratio between raising the primary versus secondary capital.
Hmm.
I'm wondering, like, let's just use simple math. I know people are going to message me afterwards, but let's say it's like 10x and we got 250 million is sort of the proposed company value.
Yeah.
And all of a sudden we sort of introduce this, that's kind of like then the post structure. And let's say whatever, a third or 40%,
Yeah.
in that range, we do in a minority.
Yeah.
What would that look like in terms of, and like I said, just kind of getting a sense. It doesn't, I
That's
know
a great question. I would say even for the new investor come in, if it's too much secondary, it will raise red flags. I think a good rule of thumb is 2-to-1 ratio. So 2/3 is primary, 1/3 is secondary. Obviously, you can do plus minus, a few basis points from that. But I think that's a good rule where new investors want you to take most of the money, let's say 2/3 of the money coming in, to work, right? Put the money to work, grow the business, because ultimately you guys are aligned to grow the platform even bigger, so everybody wins, right? Take it to a higher valuation. And 1/3 could be, then secondary to then provide some sort of safety net for you and your senior leadership, so that, again, like I mentioned, that psychological effect of leaning it into it even more aggressively. And some of you guys, probably you specifically, because you bootstrapped this business for the first few years, you probably didn't take a dime of salary, right? So this is kind of that, compensates for that, right? To your family, it's like, hey, I didn't just, this is my sweat equity, right? Getting some return. So that's my rule of thumb. It's a 2-to-1 ratio. Should not be the other way.